Now it's time for our weekly energy update with Dan McTeague, President of Canadians for Affordable Energy.
Well, thank you for that, Julie. And I certainly had a lot of comments last week about the conference of the parties, the COP28 and the 27 that preceded it, with the same kind of climax, no agreement, suddenly a deadlock, suddenly the widen open and with an agreement. And of course, this one is to get rid of fossil fuels. By the way, good luck with that. As I mentioned, people like Al Gore, who were there, and the 97,000 other people would have had a hard time swimming all the way back to the United States or their destinations without fossil fuels. But I digress. It's been a great week for consumers right across the country for fuel, mostly because we have a panicky market, energy market that isn't really run by traders, people who actually trade physically in oil and gas and diesel and the like. We're actually being run, or at least the commodities being run by, hedge funds who rely on algorithms, who rely on AI. It's created a bit of a panic situation where, in light of OPEC's decision to try to cut production, they're still ignoring fundamentals. All that came to a bit of a halt on Wednesday when U.S. Fed Chair Jerome Powell indicated that this would be the last of the interest rate increases in the United States. That's a signal to the rest of the world, and the likelihood of 3 or 4 cuts in 2024. What that really means is it puts to rest the theory that demand will somehow, crater because of ever increasing interest rates. And in fact, that demand could bounce back as the cost of credit eases. That would be true of Canada as well. Of course, we know in this country, the federal and other governments, provincial governments have borrowed massively. So we may not see the same benefit the Americans get, although they've borrowed a lot. They have something we don't. It's called a reserve currency. We would have a stronger currency in this country, shielding consumers against higher prices for just about everything if we actually had a petrodollar. But it takes 135 pennies to buy a US dollar. That contributes about 20 cents to a liter of gasoline, 22 for diesel. And of course, it's not likely that we're going to see that come back to parity anytime soon. What that means, though, is in the last 2 weeks of December, as we head towards Christmas, we're going to see a bit of a tightening of the market, but not a significant one. For record, prices that we're paying today is pretty much what we were paying across the country last year. So whether you're in Vancouver or Toronto or Montreal, these sound like great prices, but in fact, you were paying pretty much the same thing around the middle part of December 2022. That also means is that we could see a surprise as soon as things like weather begin to make a change, particularly on the diesel side, because so far, like last winter, we got away with a relatively warmer winter in which diesel supplies weren't as compromised or as crunched. And we also know that Europe has been able to stockpile a lot more with natural gas and diesel. So as long as things remain warm, there'll be no crisis. And what that means, if I'm going from Vancouver all the way back to the Maritimes, the $1.65 you're paying in Vancouver, $1.71, $1.72 in Victoria, we could actually see by the end of the week a net increase of only 2 cents a liter. Worst case scenario. Best case scenario, a 2-cent drop. For the rest of interior BC, roughly ranging in the vicinity of $1.59 to $1.62. Look for those prices to remain pretty much the same. As for Alberta, Saskatchewan, and Manitoba, again, I'm looking at a scenario that could lead to a 2-cent increase, but that won't happen until next Wednesday or Thursday. This week, heading into the weekend, no real significant changes. For Ontario, right now in the range of about $1.40 a liter. Look for them to, of course, go up 3 cents a liter on Saturday, come down a penny on Sunday. So by Wednesday or Thursday of next week, probably where it is very much now, $1.41, $1.42. And the same, of course, would apply to Quebec, which has seen, and they're very happy to see this, $1.52, $1.53. Those prices aren't likely to change much, maybe 2 cents either way, while the Maritimes, which have begun to enjoy prices, particularly in the diesel side, that are 60 cents less than they were this time last year. That's 60 cents a liter. Look for the below $2 for diesel to remain, and for gasoline to continue to bounce around pretty much where it is today. They saw some substantial decreases, which the rest of the country saw almost a week ago. They finally got today and on Thursday. You're likely to see those prices remain pretty much firm for the next week. So in the final week of December, as we head towards Christmas, look for everything to remain, relatively speaking, quiet, up a penny a day, maybe down a penny another day. At the end of all of this, it's not looking like there's going to be a big Santa Claus rally on markets. We'll have to wait until January to see where prices go. That's it for this week, Julie. We'll talk next week.
Thanks for that, Dan.